Yep. Perfect. Excellent. All right, man. Let's get started.
All right, cool.
Good deal. All right, guys. Well, thank you for that. Sorry, we've had a couple of complications here. Thank you, guys, for putting on the webinar. Thank you, Reed. I want to welcome everyone. Hope everyone is doing great. What we're going to talk about here today is, as you can see, options credit spreads for monthly income. Now, I'm going to ask you guys in just a minute who in here has ever done this kind of thing before. But let me just quickly say one thing before we get started, if you don't mind. First of all, what I'm about to show you really works. Okay. I'm not exaggerating. I'm not going to be showing you stuff that doesn't work. It really does work. And I feel like I have to say that because I find that a lot of times when I come across the education world out there's a lot of things out there that simply have no chance of working, but this really works. And I'm going to talk about this here in just a few minutes. Who in here has at least as one of your objectives to generate income in the stock market? By show of hands, type in me if you have. I'm not taking track of your name, by the way, if you're I'm just curious. So a lot of yeses and me's going in. Okay, perfect. Who in here has ever actually done the credit spread? Just curious. Type in yes for me if you've ever done that. Okay. And those of you guys that have done this before, have you ever had the situation where you do 5 trades and you make money, and then you have 1 or 2 losers that wipe out all the gains? Who's ever done that before? Yeah. All right. Oh my God, it's like a lot of yeses. Okay. I'm going to show you guys today how to avoid that. How does that sound? What I can promise you, what I'm going to show you here today is most likely not something that you've ever done before when you do this kind of stuff, because it's not being taught. It's not what people want you to think. So if you've ever had that problem where you do 5 trades in a row, by the way, it doesn't really matter whether it's a credit spread or any kind of trade, and then you have one losing who wipes out all the gains. I'm going to cure that for you guys right now in the next 45 minutes or so. Okay, so just quickly on my background, so you kind of know what I'm talking about here and where I'm coming from. I originally come more from the sell side of things, meaning places like JP Morgan. And what that's allowed me to do is work with some of the very best traders and investors in the world and see how they really actually make money. It's allowed me to work up a great network. I just literally last night just met with one of the great investors in my network now, thankfully, to this background, and really gives me great access to some of the best strategies out there that people are applying. And what I'm about to show you is the best strategy that I know, period, in any time frame that I now do for a lot of accounts personally on an advisory basis. And these big accounts wouldn't allow me to do that for them unless it actually worked. And now, so I'm very fortunate to be able to pass all this knowledge on to not only my direct clients, but also the broader audience such as yourself. Just a couple quick more things before we get started to build a little bit of perspective. I think it's really important to keep things as simple as possible when it comes to trading and investing. And the only way you can do that and eliminate the noise is by having a repeatable process. So what I'm about to show you today is all about a very repeatable process. So what you want to do is stick to a process that works and not get sidetracked with all the noise out there, because a lot of people are probably sick and tired of all the noise you're seeing every single day in the market, right? Yes? Okay. Great. So also, I think it's important to understand that, at least in my opinion, we live in the best time ever for self-directed traders and investors. And I say that having gone through a few cycles myself. I've been a trader investor now for 21 years. I can tell you that I think the economic forces and social forces are really, everything's bringing technology, better and better tools to the investor and trader at home. I can tell you that because I use a lot of the institutional tools and the retail tools for myself at my firm. And I can tell you that a lot of the tools at disposal for retail is actually at least as good as what's out there for institutional investors. Also, from a liquidity standpoint, indeed, the types of tools available out there for you with the advent of ETFs and liquidity and transparency, I really think that the active investor out there has a field advantage. Having said all that, let's get right into the thick of it. This is what you're here for, so let's talk about track records. Last year, the S&P 500 had a performance of, I want to say, down 5% or so, which of course is the bar graph on the right-hand side here. You can see a very wild dispersion of returns, up months, down months, boring months, down months, the whole thing. The options credit spread strategy that I deploy and have been using for many, many years, last year made, as you can see, about 68%. I think 68.3%. And I'll show you exactly how I do that, why we do it, and how you can do it as well in the next 40 minutes or so. So first, or next question for you guys: does your profit and loss curve look something like this? This is a rhetorical question, so you don't have to answer this. But I'm pretty sure a lot of you guys have P&L curves like this. We'll reserve the questions for towards the end of the webinar, so we can make sure we explain to you how everything works first, and then we can go after your questions, so we don't interrupt the presentation too much. In other words, if your P&L curve looks like this, what does that mean? It means that you're making some money, then you're losing money again, then you're making it and losing again, right? In other words, you're kind of stagnating and not making any money over time. Can anyone identify with that? Probably, right? Or maybe your P&L curve looks something like this, where you're just outright losing money. You're losing money, you make a little bit, lose some more, right? The point is, and there's, by the way, it's nothing to be ashamed of. Most people trade this way. The point I'm trying to make here is that neither of these are helpful if you want to make money in the market, right? And I'll extrapolate on this a little bit in just a minute. Traders need income. It's one of the most important things that I've learned over time. One of the first things I was being taught when I started working at JP Morgan is that you need to focus on an income-oriented kind of strategy. I think that not having monthly or quarterly income is by far the biggest pain point for private traders and investors. So I want you to think about this. I want you to just kind of close your eyes for a minute. And we're not going to do, you have to go into a yoga pose for this. But how much more calmly would you trade if you knew that you had some sort of steady monthly income at the end of the month? Let's assume someone were to give you 2,000, 5,000, 10,000, whatever the amount it is of dollars at the end of the month, regardless of how you did in the markets. How much more calmly would you trade? Think about that, right? The answer is probably crazy better, right? You would stick to your rules better. You wouldn't feel so nervous about it. And that's exactly the point I'm trying to give you. What would you give to have that monthly income from your strategy? And by the way, just before we look at the strategy, it doesn't really matter whether you're retired or semi-retired, or you have a job or a part-time job. I'm going to show you that this strategy is for everyone because it doesn't really require a lot of time. Now, when I used to work at bank trading desks, for example, I didn't really have a big need to force trades, because if you work at a bank trading desk, you're getting paid a big salary. Now, part of the reason for the big salary is talent recruitment. The other reason is because they know that if they pay their traders a healthy stipend each month, they are less prone to make a stupid mistake and try to force trades and take on excessive risk. Does that make sense to you guys? Yeah? Okay, so that's the same thing for you at home. We need to get you at home to a point where you have some sort of a steady stream of return, whether that's on a monthly or quarterly basis, to calm you down, okay? That's really, really important to focus on. Now, private investors need regular income. Why? In order to get into it and remain in the right frame of mind. This is so unbelievably important, because the reality is, like I said it a minute ago, stagnating or losing accounts are going to result to in a loss of confidence in whatever strategy is you're applying, or even in yourself. And we really can't have that, which in turn leads to breaking rules, enforcing trades, and in other words, you're not sticking to any risk management rules anymore, and you're taking on too much risk and that kind of stuff, right? So you guys can probably relate to this. How does this sound? I'm going to show you right now a low stress, high probability, highly repeatable strategy. And the strategy has a profitability of 80 to 90%. So out of 10 trades, around 8 to 9 will be profitable on average over time. And the time requirement is very little. It's about an hour per week. Okay. Now, again, keep in mind what I said at the beginning of the webinar. Everything I'm about to show you is 100% true. I am not exaggerating. I'm not going to lie. This is all 100% true as it is. So the great thing about this strategy is that the market can go in whatever desired direction that you wish it to go. So if you're making a bullish bet and the stock or whatever the market is that you're looking at goes higher, then of course you'd make money. but it doesn't have to. It can also stagnate. In other words, it can go sideways, and it can even actually go against you. Think about that. How awesome is that? You can have a strategy where you don't actually have to be 100% correct. You can actually technically be totally 100% wrong and still make money, which is really, really amazing. Now, at the very core of this strategy lies the fact, I guess is the best way of putting it, of slopes that go from steep to vertical. You can see in this case we have a stock that had a very steep rally and ultimately ran into dramatically vertical overshooting mode. You guys see that? At some point, that stock's going to get very exhausted. The question is, of course, when and how do you determine that? And we'll talk about that here in just a minute. This can also happen to the downside. You can have a very sharp drop, like we had in the case of Walmart here, and then that's followed by a vertical, or I guess an almost parabolic move to the downside, and at some point the stock gets exhausted, right? These steep slopes, when they turn vertical, that's where the opportunity comes about. A couple things happen when steep slopes go vertical. Number one, the implied volatility, or the I guess the expensiveness of options somewhat increases, or at least becomes somewhat elevated. Investors and investor fear and greed will get to extremes, and ultimately, for what I deem a counter trend trade, the reward to risk for a counter trend trade become absolutely amazing. And that's exactly what we're going to be focusing on here in a very calm and systematic manner, that you can do this every week, every month, every quarter, and not have to get all nervous about things. Now, for those of you guys that have done option selling before, you've probably heard the following statistics, okay? And remember what I said at the beginning of the presentation a few minutes ago. A lot of people that are active in trying to generate income from an option selling strategy tend to have a return profile where they make money for 5 or more trades, and then they have 1 or 2 losers that wipe out all the gains, right? Now, I'm going to tell you this. The option statistics I'm about to show you are true. However, and this is the big thing, they are totally worthless and useless unless you do option selling the correct way. Unless you do it the correct way, these statistics are useless. Nonetheless, let me show them to you so you can kind of get your head around this. The odds are strongly in favor of option sellers. What does that mean? If you are buying an option, if you're buying an option and you hold it until expiration, you only have about a 25% chance of making money. In other words, 75% of options expire worthless. If you are buying a call or a put or a call spread or put spread, you only have about a 25% chance of making money. Conversely, if you're a seller of options, you would think you'd have a 75% chance of making money, right? That's very simple. And that's what these people will tell you. The guys that tell you all you have to do is sell options, you make money. Incorrect. Okay, you got to do it the right way. That's the only way to make money with it. The longer you hold your short options, the better your odds of success. Who in here has ever sold an option? Who in here has ever played the time decay game, Theta? Type in me, M-E. Has anyone here ever played the time decay game, Theta? Hoping for options to expire worthless. Anyone here? Type in me, M-E. Yeah? Okay, a lot of hands going up. And has that worked for you? No? Okay, exactly. That's my point. Okay, great. And it may work for you for some time, but ultimately, I tell you, it's a very difficult way of making money. So here are the 4 simple steps that we're going to focus on right now to show you how this strategy works. And like I said, I'll leave nothing out there. I'm going to give you everything you need to know for this right now. First of all, we're going to be looking for steep slopes that have gone vertical and give us signs of exhaustion. Number 2, we are going to ensure that implied volatility is at least somewhat elevated. And this is an important point. Thirdly, we're going to check for liquidity in options, because if you don't have good liquid options, you can't make money. And fourth, and this is the biggie, we're going to go ahead and we're going to be selling what's called out of the money call or put spreads using options expiring 2 or more months out in the future. Now, before you tune out, if you've done this before, like I said earlier, this is not going to be the way you've done it ever. I can almost guarantee you that. There's a very specific way in which we do this, which is totally opposite what most of traders do, which is probably exactly why it works. So ultimately what we're going to do, we're going to rinse and repeat this strategy on a monthly basis to create our quarterly or monthly income so we can get our head around and calm down and not only make money but also focus more and do other strategy if we want to. Or of course you make this your main strategy, which is pretty much what I do, and it's working amazingly well. So like I said before, at the very core of this strategy is the concept of steep slopes that go vertical. You can see a very steep rally here in the case of this stock, and then it ultimately goes vertical. Well, at some point, like I said, the stock gets very, very exhausted and it'll stop going higher. Same thing here in this stock. This happens to be shares of Netflix. You can see a very steep slope followed by a vertical blow-off move, and ultimately, stock gets extremely overbought. When slopes go vertical, then the upside tends to be capped or limited, and if slopes go vertical to the downside, then the downside ends up being limited or floored, as is the technical language. In other words, the asset will tend to stall in price. Momentum doesn't continue forever. At some point, it stalls, right? Now, oftentimes, the great thing about this, and this is not what we're betting on, this is kind of the bonus, but it happens a lot, is that you end up getting into this sharp mean reversion move, which is actually, I'll show you just in a minute, it actually happens quite a bit. So what I say we do right now is look at a few example trades so you can get your head around this. So what we're going to do for the next few slides, we're going to go through and I'm going to show you guys how this works through the lens of past trades that I've done first. That's what we're going to do first, because you need to understand the concept. Once we've done that, once you understand the concept, we're then going to go to the live market, and I'm going to then ask you to type in some tickers so you can see that it works and I'm not cherry picking. Because like I said before, this really works, and I want you to know that it works. And the only way I can prove that to you is by making sure you just give me tickers, random tickers, and I'll type them in and you can see that it works. Sound good? But first, we're going to go through the concept. You understand what the trade idea, what the trade strategy is, and then we can show you also that it works. So here, we're first going to look at shares of Facebook for an example. At shares of Facebook, over this period of time, you can see had a very well-defined move to the upside in these two parallel channels. But a lot of times they had these sort of outbursts to the upside. So again, the vertical moves that happened out of these steady or already steep inclines, actually, is the best way of putting it. Now, who can tell me what happened every single time the stock went vertical and attempted to take its steep slope to the upside? Who can tell me what happened every single time? Right, it mean reverted, yes. But more importantly, it stopped going higher, at least for a period of time. And that's the key, right? That's the key thing. Look at this. It moved higher, stopped going higher, and mean reverted. Moved higher, stopped going higher, mean reverted. Same thing over and over and over again. So let's look at Facebook, and I'm going to actually go straight to a chart here. I'm going to quickly bring it up here so you can show you this nicely. And we're going to go through an actual live chart to the actual charting platform here so you can see how this worked. So, like I showed you before, the charts, we're going to continue and extrapolate us and show you an exact trade idea so you can see how this worked. So we had a situation here at this point in time where we're looking at this point in time here where the stock, again, in its long-term uptrend that was already quite steep, made a vertical blow-off move to the upside, right? Well, at this point, the stock was extremely overbought by my parameters, and I'll show you guys in a bit how we find that. At this point, what could I have done? I could have, maybe if I owned the stock, I could have sold the stock, right? Maybe I could have bought a put. Maybe I could have shorted the stock. Maybe I could have bought a put spread. But who can tell me what is the only way in which I would have made money if I would have shorted the stock or bought puts or bought put spreads? What would have had to happen for the stock in order for me to make money? Who can tell me that? If you short the stock, if you make a directional bet, what must happen to the stock in order for you to make money? Anyone tell me? Yeah, that's right. The stock must go down, right? The stock has to go down. Now, I don't like to make that kind of a bet because if you work on Wall Street long enough and you manage money into advisory long enough, you understand that it's a difficult bet to make. I simply make the following bet. I say instead of making the bet that the stock is going to go lower, I'm simply going to say, you know what? I don't think the stock at this point in time is going to rally after having been already very overbought by my parameters, is going to rally another 7, 8 or so percent against me. Think about that. You are literally changing the things upside down. Instead of making a bet on where the stock is going to go, you are making a bet on where the stock is most likely not going to go. When I was taught that at a trading desk many years ago, I remember that weekend I went home. The guy taught it me on a Friday, and I went home, and I literally almost couldn't sleep the entire weekend. It tells you I'm a bit of a geek, but it was mind-blowing to me. And once I started understanding that, I became a profitable trader literally almost overnight. Okay, so what I did here is I simply said, you know, I think at this point the stock is not going to rally another 7 or 8% against me. Right? So I sold at this point in time a 125 strike call, which is up here at this blue horizontal. And against that, I bought for protection a 130 strike call. Okay? For making that bet, I took in a credit. It didn't cost me anything. I actually made money deposited into my account for making that bet. I received $1, or in options terminology, that's $100 per option spread. By February 8th, in this case, the stock mean reverted lower very quickly. I'll show you examples in just a minute where that didn't happen and we still made very, very nice money. A few days later, the spread was reduced to 24 cents, meaning I got to keep the difference between the $1 and the 24, meaning I got to keep 76 cents. Again, that's in options terminology, that's $76 per one time doing that trade. You do that trade with 10 contracts, you would have made $760 and so on and so forth. All right? Now that you see this, let me show you guys one more little nugget about this, and quite frankly, it's the most important point. Notice that, who can tell me what month options did we use to do this trade? Who can tell me which month option I used to do this trade? Which month did we sell? It's right there. I just want to make sure you guys understand that. This is a huge point that I can tell you that almost no one does that empirically. Almost no one does that, which is why it works. We put this trade on the month of February, correct? You can see it right here. It's February. We used April options. Okay? Now, how long did we hold this trade? A few days. The very concept of selling options that expire 50, 60 plus days out in the future and only holding the trade for a few days to our sweet spot is about 1 to 2 weeks is virtually not taught. It is the trade that I see almost every successful prop book do, which is probably exactly why they make money. The ones that make money. I cannot tell you how unbelievably existentially important as a trader is to understand this concept if you want to generate income from the stock market. If you are in the business of selling weekly options, in the business of selling front month options, you ultimately are going to sit on a binary option. This is a little bit more detail that I want to go into, but you're basically gambling. Over time, I'm not saying you can't make money in a short period of time for that every once in a while. Over time, I can almost guarantee you, you will not make money because you're basically gambling. Let's look at another example to bring this home a little bit more. Here we're looking at shares of Tesla. And let's go straight into the chart. Here we're looking at Tesla, and you can see again a very classic example of what I just showed you. We had a stock that dropped to the downside, and then it went vertical to the downside, right? And in this case, we again went ahead and we made a bet. In fact, in this case, we didn't make a bet that the stock has to go higher. We simply said, I don't think that this stock is going to drop about another 15, 20% against me. Think about that. Again, I made the same bet like before, except now it's a bullish bet. And instead of making the bet the stock has to go higher, I simply said at this point, because it's so overbought, it went from steep to vertical. I simply don't think it's going to drop another 15, 20% against me. We received $225 per option contract for this, making this bet, deposited into our account. It didn't cost us anything. We received money. A few weeks later, the spread was reduced to 43 cents. And we ended up keeping the difference, meaning we kept the difference of $182. Okay? You guys see that? Now, again, I'm just showing you the concept here first. Like I said a few minutes ago, I need to show you the concept first before we can go into the live market. And if in just a couple of minutes, I'm going to ask you to give me your ticker symbols blindly, okay? So you can see that it works. Because I don't want you to think I'm cherry picking. I'm really not, all right? That's my promise here. So we ended up making $182 or $1,820 basically. If you would have done it 10 times, and with one option, it would have made 182. And all we said is the stock is not going to drop another 15, 20 bit against me. Wouldn't you agree that that strategy has a higher probability of making money than if I would have bought the stock here? Would you agree? Type in yes if you do. Simply the fact that we are not making a bet on where the stock has to go, we're simply saying we're making a bet on where the stock is most likely not going to go. You're literally turning the odds in your favor. Guys, by doing this, you're literally overnight, the minute you make the decision to do that, you are turning from being the gambler into the casino, or you're turning into the bank, if you will, overnight with that very simple decision. That's how you put the odds in your favor. Every single smart trader investor I know does this. Okay, let's look at another example. And I showed you before an example right now where we had a directional move in our favor, but I'm going to show you that this doesn't have to happen. So here we're looking at LinkedIn. You can see the stock had a steep drop followed by a vertical drop to the downside. It got very oversold. Here's what we did. At that point, the stock was extremely oversold by my parameters. So what I did is I went ahead and I sold in April 90-85 put spread. So we went ahead, we went about 10% out of the money, as it's called, when the stock was trading here just north of $100. And we simply said, I don't think this stock is going to drop much below $90, or another about a little more than 10% below from me, right? We received 95 cents or $95 per one time doing the trade. If you would have done it 10 times, you would have received $950. A few weeks later, the stock had basically gone nowhere and the spread was reduced to 43. If we would have closed the trade at that time, we would have gotten to keep about 40 cents or $40 or $400 if we would have done this with 4 contracts. In this case, and this is I'm showing this for example purposes, I did actually hold this one until expiration, which I literally never do, but I did it in this case. There's multiple reasons in the very specific, it was a couple of years ago at this point, but just for example purposes, so you understand why we did this. Okay, by April expiration, the stock had done nothing. It didn't go higher, didn't go lower. It could have done both, and it could have still made money, but it didn't do anything. I got to keep the entire 95 cents or $95 or $950 if I would have done it with say 10 contracts of income. Okay, now what's really important about this strategy is that you think like a pro. In other words, the objective here is not to pick winners, but rather it is to stay out of losers. That's the most important thing I can teach you through the lens of psychology, because if you do that, it's going to ensure that winners and profits basically take care of themselves. You can have some losing trades. Like I said, my track record is about 80 to 90%. In other words, out of 10 trades, on average, around 8 to 9 or so on average over time tend to be profitable. And again, like I said before, the most important thing about this is that you're making a bet on where the market will most likely not be at a certain time in the future. Conversely, if you're buying stock or shorting stock or buying calls or selling calls or buying calls or buying puts, you are making a directional bet, which is by definition a much lower probability trade if you think about it that way. Also, it's important to give yourself time. I think it's really, really crucial that you give yourself time. Perfect timing is really not necessary with this strategy. And I think that's really, really important here. In fact, what I would like to do is I'd like to get you to the point where you look at the credit spread, the way of expressing a view this way, as your main strategy, and think of that as your regular income. Every single week, every single month, I want you to think of those as your primary trades first. And after that, you go ahead and you can put on whatever other kind of trades. Maybe you do some day trades, you do some whatever kind of trades. It's going to help you dramatically calm down. Now, like I promised you a few minutes ago, we're going to go into the market in just a second, and I'm going to show you guys how this actually works, that I'm not cherry picking. Okay, so pay attention. If you've clicked away into your email program, if you're chatting with someone on another thing, if you're tapping on your phone, if you're reading news, please come back now. It's really, really important to understand this. All right. Now, before we go into the live market, I'm going to show you a couple of charts here so you can see what we need to focus on here in just a minute. Can you guys see these blue arrows up here? Who can see the blue arrow up here? Yeah? What happened after the blue arrow no longer printed, after there's no more blue arrow to the right here? Repeat after me. The stock stopped going higher, right? Wouldn't you agree? The stock stopped going, yes, it went lower, no doubt. But again, what's actually happening is it stopped going higher. How about here in shares of Google or Alphabet? What happened here after the arrow stopped printing? It stopped going higher. Correct? At least for a few days to a few weeks. That's the key. We're not making an internal bet that the stock can't go up or down anymore. We're simply saying that for some time, this stock, for the next few days, the next few weeks, is probably not going to go higher. How about here in this ETF? This is the consumer discretionary ETF, the XLY, in case you care. You can see the blue arrow. What happens after there's no more blue arrow here? The stock stops going higher, right? What this tool allows me to find extremely overbought and extremely oversold conditions in stocks and ETFs and really any asset class for that matter. And it finds me the perfect spots to put on these income trades, these options income trades, these bear call or bull put spreads, as I referred to just a few minutes ago. It's called the TST Vertical Export Indicator, and I'm going to show you guys right now not only how it works, but also that it works. And for that, right now, what I'd like to do, I'd like to ask you guys to type in some ticker symbols into the chat box right now, so we can go through and we can see if we can find any signals that the stock showed us, the indicator showed us, so you can see that I'm not making this up, that it actually truly does actually work. Yeah. Okay. And so what I'm going to do though, also, just so you know, I'm going to go for ticker symbols that you guys are typing in that people actually know. Sometimes people type in esoteric ticker symbols, which doesn't really help anyone. Okay. So we're going to start off here with Stevenson, and he wants to look at NVIDIA. So let me bring down, I'm going to type in NVIDIA here, and here are shares of NVIDIA. Okay. And you can see that the last time we had NVIDIA, we had an up arrow printed here, and this is now, it would be a bullish signal. What happened to me, repeat after me, Stevenson, what happened after there's no more blue arrow at the time? Excuse me, no more orange arrow. Okay? The stock stopped going lower, correct? Wouldn't you agree? The stock stopped going lower, yeah? At least for a few days to a few weeks, the stock stopped going lower, allowing us to put on this beautiful opportunity trade. You sell a put here, you buy one against for protection down here, you keep it on for a few days to a couple of weeks, and you collect the income. It's a completely different way of thinking, which is exactly probably how it works. Okay? And we're going to talk about the risk management here in just a bit, okay? Because I know a lot of people are interested, how do you do this? All right? Perfect. Okay, let's look at some other tickers. Again, I'm going to go for tickers that people actually know, because I want to make sure that you see this. One of them that's printing right now, it's not a valid signal yet, is Kraft Heinz. Okay, the stock today is off almost 30%, and look at the little arrow it's printing. And I'm going to show you guys in a minute how we want to take advantage of that. All right, it's not yet a valid signal. The arrow needs to stop printing first, right? And it may do so by tomorrow or the day after, or next week, I should say. Okay, but let's go through some other examples, some other tickers you guys have. Let's look at, for example, Eileen wants to look at Oracle. Okay, so Oracle, let me just bring up the chart on Oracle. Okay, here's the last 2 times Oracle gave us these 2 errors. And again, I'm just typing in the ticker, all right? Here's Oracle. What happened? Repeat after me. What happened after the blue arrow stopped printing? The stock stopped going higher. Am I correct? At least for a few days to a few weeks. Same thing here. These are the last 2 times we got signals. All you do then is you sell a call in this case up here, out of the money, and particularly it's important to sell an option that expires in the future, not one that expires tomorrow. Sell one that expires 50, 60 days out, and you only keep the trade on for 1 to 2 weeks. That's the key. And you buy one, a protective call up here so you have a limited risk. The reason why we do this, guys, the reason why we don't sell weekly options is because it's gambling. You're making way too near-term a bet, and it's going to stop you out a lot of times with a binary option. Okay, now let's look at some more examples. Look at what are some examples? LEG. That's that leg mason. Mike, yeah, okay. Here's LEG. All right, and this one just happened a few weeks ago, actually a couple of weeks ago, and the stock has since moved above. But what happened over the few days ensuing here? The stock stopped going higher, right? The stock stopped going higher. For at least a few days. That's all you need. We just did a trade. Yesterday we closed a trade, or today we closed a trade in a stock. We literally held it for 2 days, and you can make beautiful money in a very, very high probability way. All right, let's look at again. I want to go for a name that people know. How about Qualcomm? Sure. Here's Qualcomm. This one is by Doug. Here's Qualcomm. All right, and here's the latest signal in Qualcomm. And repeat after me, Doug. What happened here? What's the last time this arrow stopped printing? What happened? Repeat after me. The stock stopped going lower. It went sideways and ultimately it went a little bit higher. Okay? Right? And the reason we sell spreads, guys, is it's much, much safer than selling just a call or just a put. I've done this strategy for 17 years. And the reason it works, I've tested everything you could possibly imagine. And the reason why this works, is because of the way we pick our strikes and the way we pick our stocks ultimately as well, and the options we sell, right? LMT, it's funny. People always ask about LMT, and I wonder if there's if everyone just loves that stock so much. Here's LMT, Lockheed Martin, and here's the last time LMT gave us a signal, and this one comes from Ali, right? I think that's how you spell your name. What happened? Repeat after me, Ali. What happened the last time this arrow stopped printing? There's no more arrow here. The stock stopped going lower, at least for a few days to a few weeks, right? Ali, agree? Excellent. All right. Let's take 2 or 3 more. How about again? I'm trying to take names that everyone knows. How about ConAgra? I think people know ConAgra. Yeah. Here is CAG. Okay. So here is the last 2 examples. You can see here, arrow stopped printing, right? And what happened? The stock went sideways to higher. Beautiful spot to sell your put spread. Boom, boom. How about here? Same thing. Arrow stops printing. What does the stock do? It just goes sideways. Could have sold a put spread. Beautiful. Sell a put there, and happy days. Do you think if you had a tool like this and this approach, who in here thinks they could make money using A, this process, and B, this tool? Type in yes if you think you could. I'm honestly just taking your ticker symbols, okay? How about let's see, Starbucks. Sure, Starbucks people know. Here is Starbucks. The last time, let me bring it down. Here's Starbucks. This one comes from Raleigh. Okay. What happened here after there's no more blue arrow? The stock stopped going higher. Am I agree? All we do is once there's no more error, and I'll show you guys how the indicator, how we find those tools in just 1 second. We sell a call up here. We buy a call against it. And all we're making, the only bet that we're making is that this stock is not going to explode further higher against us. Right? Okay. You need to wait until there's no more arrow printing. Once there's no more arrow printing, Rosa, then you put on the trade. Don't put it on here. You wait until the arrow stops printing. All right? So let me show you guys how this works, and I'll show you guys a couple examples right now that I'm looking at. Sound fair? So can you guys see that I'm literally just took your tickers. You saw that, right? Those of you guys whose names I called out, you saw that, right? These are daily charts, yes. All right. Let's go through this and let me show you. So right now, and again, I'm not cherry picking, I'm literally just taking the signals that are on the on the watch list or the scan. So there's two scans with the indicator and scanner, okay? And one of them is an overbought signal, right? For example, in Starbucks. So these are the overbought stocks. They show up in this scan here. And then there's the oversold stocks down here, okay? That we're going to be following. So for example, one stock that's really overbought right now is probably Garmin. I click on Garmin, and Garmin comes in here. You guys see that? So now what do we need to do? Now we need to wait until there's no more blue arrow. I would assume at some point early next week that these blue arrows will stop printing. So I'm going to take note of this stock right now. And next week, once we have a day when there's no more a blue arrow and a little bit of a down day, we're going to go ahead and we're going to sell an out of the money call spread. We're going to sell a call here. We're going to buy a call against it here. And all we're making, the only bet we're making, is that the stock is not going to further explode against us after having already made this dramatic move. You just saw how the indicator works, right? I showed you a lot of examples right now, and I'll show you a couple more in just a few minutes. Oversold. How about oversold? Well, one of them that's oversold, we just looked at it a minute ago, is Heinz, right? Very oversold, but it's not yet a valid trade. Why? Because the arrows are still printing, right? The arrows are still printing. So it's not yet actually triggering a trade. So that's all I do every single morning. I come in, I look at a couple of these ideas, and I just see if there's an opportunity. It's that simple. That's literally all I do. So for another one we're looking at right now is Wayfair.com. This one had a beautiful big rally today after an already steep move, and now we're waiting for a day when there's no longer a blue arrow. We usually do $5 wide spreads, Chandra, but I'll show you guys in a minute how you can learn more about that. That's usually what I do. I'm not saying that's the only thing you can do, but that's usually what I do. Let's look at one more example because I feel like you guys want more example. Yeah, you guys want more example? Let me go through the list here. How about ADSK? Yeah, I see that one in here several times. Let's look at ADSK. Here's ADSK. This is Autodesk. This is a software company. Okay. And what happened here? Guys, I'm just taking this one taken David and Wilfred. You guys are asking for Autodesk. What happened here after there's no more blue arrow? After the arrow stops printing, the stock stops going higher. You sell a call, you buy a call. And that's all you're doing is the only bet. Same thing here. After the blue arrow, the stock stops going higher, correct? Right? How about down here? We had an oversold signal. You sell a put, you buy a put. You wait a couple days. In this case, the stock stayed above this level for quite some time. You could have stayed in it for 1 or 2 weeks. Close the trade. Okay? Excellent. You guys see how that works? Perfect. Now let me explain a little bit what the tool works for, and then I'm happy to go through a little bit more and show you more intricate details on the risk management and everything. Now again, the key thing about this is that we don't use options expiring next week. We don't use options expiring next month. We use options expiring 50, 60 days or more out, but we only keep the trades for like a few days to 1 or 2 weeks. It's unheard of, guys. Okay. The vertical expert indicator works for Thinkorswim, for TradeStation, NinjaTrader, and TradingView.com. Okay, and it actually also even works on our own proprietary platform, which I'll show you in just a minute. Now, let me show you guys a little bit more about how all this works. You can get this if you'd like, the indicator and scanner, including the course, and there's a lot of stuff we're going to give you here to make sure everything you need to make the strategy work, to make a monthly and quarterly income stream happen, we're giving it to you right now here. If you're interested in this, you can get the Options Income Secrets course. What is it? It's a pre-recorded video series and a lot more stuff that is you have access to forever. It doesn't go away. It's going to teach you in great detail everything about the strategy, the risk management of it, how to diversify it among different sectors and groups, and really to make it an income stream for you. It's going to teach you low stress, high probability cash flow strategy. It's going to show you the way that the pros actually use options, and I really, really mean that. Okay. In addition, you get a bonus ebook, the Options Credit Spreadsheet, and you can have all this for a one-time. It's a one-time payment. It's not. There's no membership. It's not a membership. It's a one-time payment of $197. You can go to thesteadytrader.com/income, and I think I can quickly type that in, or actually maybe you read, or you guys can want to type that into the chat box as well, so people can get that. thesteadytrader.com/income. Now, what else is included? There's a ton of stuff here, everything you need to make this work for you. Number one, we are including in this the brand new options module on the Iron Condor. The Iron Condor is basically a way you can double your income, okay, and double your selling income with this. But I promise you, it's a very different way of doing an Iron Condor than you're doing right now. I can literally guarantee it to you. Most people don't do it this way, which is exactly probably why it works. So that's included as well. You're getting that brand new module. Also, again, you're getting the vertical export indicator, and I'll show you exactly more about this here in just a second. First of all, again, this is how we find these oversold and overbought opportunities. Just like I showed you here on the example on Autodesk just a second ago, right? We find the opportunities. It's all we do. We just scan. Just look at this. These are the past few examples in Autodesk. Overbought, the stock stops going higher. Overbought, stock stops. It's just how it is, right? And here's oversold as well. So that's how it works. It works for Thinkorswim, for TradeStation. It works for NinjaTrader 7 and 8, I think. And it works for TradingView.com as well. If you don't have Thinkorswim or TradeStation or Ninja, TradingView.com is free. Okay, you can use it on there, and I can use it on our Market Rover as well, which I'll show you in just a minute. We're going to go through and do one more scan in just a second. I just scanned the market for like the past 30 minutes for you guys, and I'll do more in just a second. Okay. Also, what you get is the live bonus sessions. By the way, this should say Monday. Let me quickly go in here. February. This is good. Okay. So the next, we do live bonus sessions of this as well. Okay. The next live bonus session is going to take place on Monday, February 25th at 10 a.m. So if you're interested in this, what I would urge you to do is go ahead and get this now, watch the videos over the weekend, and come back on Monday. And these are always recorded. So it's also ongoing communication, right? So it's also ongoing webinars, right? So it's not just a one and done thing. I want you guys to learn this stuff over time in all different market environments, which we do about one live bonus webinar on average every other month. And actually right now we have been doing this even more often, I think every month. Also, what we're going to give you is a personal mentoring phone call. For the first 25 of you right now that get this, I'm happy to jump on a personal mentoring phone call with you, and I'm happy to work you through this. Any questions you have personally around any type of trading you have, you do, or any things like that. Okay. It actually, yes, it does. It does work intraday as well, Barry. I'll show you in just a minute. Is anyone here a day trader, by the way? I can show you how the indicator works intraday as well in just a minute. Okay. So again, there's the course is here, everything you need to know and learn in the course, and also a couple more things. You can install it on different platforms if you want. You can run it on TradeStation and Thinkorswim. I don't care. You can run it on multiple platforms if you want. All right. Now you're also going to receive an additional supercharged trading tool, and it's called the Market Rover Lite. And what the Market Rover Lite does, it scans the S&P 100 stocks. This is our web-based platform. It scans the S&P 100 stocks for bullish and bearish reversals. Okay, it's web-based. It scans the S&P 100 stocks for bullish and bearish reversals. This is an additional indicator that we're giving you absolutely free in addition with this. Also, we're giving you 30 days free, 30 days to the Market Rower Pro. What's the Market Rower Pro? The Market Rower Pro is our full-fledged process platform that also has embedded in it, includes in it, the Vertical X Pro indicator that I just showed you. So the Vertical X Pro indicator, you can see it right here, it's actually embedded in the Market Rower Pro. So we're giving you 30 days access to this as well. If you once you get this, it's very simple. You go into, let me quickly show you how it works. You go to the website. Okay, let me quickly show you this. So let me go back to the beginning, and I want to answer all of you questions, guys. Really good questions, by the way. So who's excited about this? Who thinks they can make money with this? Let me hear that again. I saw a lot of yeses went up before. So let me show you again how this works. Okay. Okay. So what you do is once you sign up, all you need to do is go to the website. You click on indicators, and you'll get the instructions in your email. You'll get into TST Vertical X Pro, and then there's videos here how to install it for Thinkorswim and TradeStation, all that kind of stuff. So it's all right there. Yeah, it's very simple how to do that. All right, now let me show you some of you guys want to know about the dashboard. Yeah, so the Market Rower Pro actually also has pop-up trade alerts, like you see right here. Vertical X Pro is right here, so you can see, for example, Garmin is popping up here. This is in our platform that you're getting 30 days access to. You can see it here how it did the indicator, all our indicators are actually on this platform, the beta reversal as well as the Vertical X Pro indicator. This is the Vertical X Pro indicator. This is not the beta reversal. Yeah. Okay. The way to purchase this is to go to thesteadytrader.com, thesteadytrader.com/income. Okay. Les, you go to thesteadytrader.com/income. That's how you get it. Okay. Yes, and is anyone here a day trader, by the way? Would you like to see opportunities intraday? I'll give you a random example. Again, just so you can see that I'm not making this stuff up. Yeah. Okay. Let me bring up an intraday chart. Give me 1 second. All right. So let's pull up, for example, I don't know. Let's just go over the big stock everyone knows, like Nvidia. How's Nvidia sound? Okay, here's Nvidia the past few days right here. Here's Nvidia, 5-minute chart intraday. I'm just going for a random chart. Who can tell me if you think you could have made money with these signals over the past few days? Once the blue arrow stops printing, you would have gone short here, you've gone short here, and you would have gone short here just yesterday. You guys see that? I'm not making this up, I promise you. I literally just typed in the ticker, just a big name that I saw in my that I thought would make sense to you guys. Okay, I want you guys to just think about that. If you would have taken this trade in Nvidia, for example, yesterday, I mean, the stock after doing this dropped like 1.5% really quickly, and that's an intraday move, right? That's not a big deal, but intraday, that's a big deal, right? So you guys can see that this works, right? Yeah. All right, great, very good. Okay, yeah, let's go through. That's a good. Aaron wants to look at it. For example, what happens if it doesn't work? How do you get out? Let's talk about this a little bit, just for a couple more minutes, and then I think my time is about up. Let's have a look at an example like, for example, let's take the NASDAQ 100. Okay, let me see if I can show you an example of a trade. Or for example, I can give you BOX, a trade that didn't work. Okay, here, for example, is BOX. This is a trade that just signaled last week. Okay, the arrow stopped printing, or 2 weeks ago. The arrow stopped printing, and then the next day, on the 6th of February, we had a day without an arrow, and it was a down there, so it was a valid entry point. The day to get out of this trade would have been this day right here. This day right here. So the maximum the stock only rallied like 2% against it. That's when you get out. Now the key thing is here, guys. The key thing to this, We are not using options expiring this week or next month. We use options expiring 50, 60 days, but we only hold these trades for a few days, or usually the average is about 1 to 2 weeks. That's why when the trade goes against you, you're not going to lose a fortune. For those of you guys that have done credit spreads before, can you see the value in putting on a trade this way? Okay. Intraday, David, I would not do credit spread. No, not intraday. Intraday, you use this for directional trades using stocks. Okay. All right. Now, the exact details of how many days to wait and all that stuff that's why we do ongoing education. So if you're interested now, if you're one of the first 25, remember, you're also going to get a direct personal call with me. Okay, you're going to get access to brand new module 6. You get the vertical export indicator. It works for, like I said, it works for Thinkorswim, TradeStation, NinjaTrader, and TradingView.com, and our market rules. So if you have none of these platforms, you can use it on TradingView.com. Yeah, I'm just going to go 1 more minute, and then I'm going to pass it over to our hosts. This is a one-time payment. It's not a recurring fee. It's a one-time of $197. And again, make sure if you join right now, what you want to do is you want to watch the videos this weekend, watch the videos, and then come back on Monday, which is the 25th of February. All right. Come back on Monday, and we're going to go and handhold you through using the indicator, through using the process, through putting on the trades, everything you need to know. And we do this on an ongoing basis, not just a one-time thing. Okay? Yes, you get upgrades. You don't. This does not. If we do updates to the indicator, you're not going to get charged for additional updates. Okay? Perfect. No, you own it. Once you buy the indicator, you own it. I will say though, what I will not do refunds on this product. Why? Because once you get it, you own the indicator. We physically can't take it away from you. So if you just want to think you're going to try this out and get the indicator, we're not going to refund any money on this. Okay? I only want people that are serious. If you're not serious about this, please don't get it. I only want serious people who actually want to make money in the market. All right? Excellent. Well, listen, I'm looking forward to seeing all you guys in the webinar on next Monday. With that, I'm going to pass it back to our host. Thank you so much, Reed. And guys, great stuff, and good luck with the rest of the event.
All right. Once again, ladies and gentlemen, that was Serge Berger from thesteadytrader.com, and that link to get his indicator is www.thesteadytrader.com/income.